Good evening, traders. Let's take a look at what's going on in a rather boring market. As I said this morning, the key was to avoid the chop, and that is exactly what I've been doing for the last days. I think I only executed one trade so far this week, and that was in the Great Britain Pound USD. The key to what's going on right now is that there's so much uncertainty in the market. We have the confusion from the Italian elections, and we have the run up to the showdown on Friday with the beginning of the budget cuts in the U.S. if they don't reach a deal. That's what the headlines are talking about, and that's why people are supposedly sidelined. But what I think is, let's just pull a little bit back here. I'm sure that's playing in the cards, but if we look at the Great Britain Pound USD, you can see that the pair since the beginning of January has moved down, and it's almost like clockwork that it moved down starting on the first day of January. Year to date, it's moved from 163 down to 151.92. And now let's look at the Euro USD, which obviously is not going to have the same kind of steep decline. But we can also see in that pair, which the pair actually moved up in February, but since the beginning of February, the pair has moved from 137 down towards 130.20, so that's 700 pips this month. And if we look at the Aussie USD, I know there's a decline. I don't know if it's as extensive, but you can see there this pair, since moving up towards the 106 level in the beginning of January, actually moved up pretty aggressively. It's moved down towards the 102.20, which isn't as much, but it's a 400 pip basically basic move. And you can see that the crosses are moving down towards significant support and resistance levels. If they haven't break it, we have 101.45 in the Aussie USD, and we also have the pair trying to manage slipping and sliding to stay above the 102.20 level, but I can't really find any momentum at that price level. But it does look like it's trying to hold there at least. So what we can see is also with the pound, it's below the significant resistance that we talked about in the Great Britain Pound USD, and now the cross is kind of a no man's land, where we have support at 149.50, 149. You can see the New Zealand USD broke above, broke below after sitting in this range for so long, 83, but it hasn't really gone into any sort of free fall, and we really want to watch this pair. If it gets back up to 83, it could be a good opportunity to go short, I might add. And then if it gets up to 83.40, that would be even better. And the yen, we all know the yen story. This pair has been all over the place, but now it seems very comfortable consolidating between 94.50 and 90-20 level. And the Euro JPY, our darling, our favorite mover, who hasn't been moving at all lately at night, but that doesn't mean anything. This pair, let's look here, I didn't even pay attention to this. This pair broke out of the triangle today, but of course it did look like a false break to the downside. And now it's back above the 121 level, and it looks like, oh my gosh! So now we're back in this range between 122.50 is the 122.50 is definite resistance, and we definitely are at resistance right now around 120.30, 140. But that's not what we're here to talk about. What we're here is we've had a very big month and very big moves, and we have uncertainty on the futures, and traders don't want to ruin their month. So a lot of them are remaining sidelined at this moment, and very happy with the moves they've had and with the profits they've taken. Unfortunately, I guess we lost a little bit at the end, and a little way on the cow, but at the moment, it would probably seem best to do nothing, and that might be the case again tomorrow, unless we get a significant GDP report that really startles the markets, which everybody is, saying that we're going to probably get a revision to the upside on the GDP report. So we'll have to see what happens there. I mean, look at the Great Britain Pound and the cow trade. It had 1, 2, 3, 4, 5 crosses in a row. I've never seen that before. And basically what we need to watch, and I'm going to paint the picture here for us. What we need to watch in these pairs are basically breaks of these ranges. And I know it's a rather large range, but until we get a move up to 152.30, I'm not going to be interested in this pair. I mean, sure, you could jump in one of these trades, but you could also get chopped up into little slices. This happens every once in a while. It happened in the middle of, and it normally happened like last summer when we had the constant news flow coming out of Europe. the kicker was that we'd sit down, chop, 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 and then the night before the news would come out, everything would kick up beforehand, just with pent up demand, people jumping the news. And then, interesting enough, the data coming out of Europe would be negative, but the move would have already occurred, and it wouldn't really retrace the backside. And basically, liquidity had trained out of the markets. And right now, we just have an illiquid market that's just drifting sideways and back and forth. If you really wanted to do something in the pound right now, you could play the range, with the top of the range being the 152.30 level, and the bottom. Let's see. The bottom of the range, which is pretty clear cut, and it's is right here at, let's just say 150.70 and make it all pretty for ourselves, at 150.70. And you can play the top of the bottom of the range. I mean, there's plenty of pips in there, but you can also definitely see that this is becoming shallower and shallower and shallower. And let's just, for shits and giggles here, run a trend line off this and see what we get here. Is if there's any kind of well, there's obviously not there, but let's see. Any kind of resistance support. No, we definitely just broke above that trend line too. So, what there's, I mean, if I had to make a bet, because everybody is betting that we're going to get a move down here into the end of the month, we'll probably have to watch Friday, and we'll get kind of a rebuttal into the new month and probably hit the 50 fib on this entire move back down, because things don't normally drop that quickly, that fast. Okay, so but what we're going to watch in the cow trade, let's get back to what our bread and butter here, which I hope you haven't been feeding on. We have to watch these trades right now, right here. We need to break out of this range. Any move up to I would look for a signal on a move back up to the top of the range, or I'd look for a signal on a move with a break of the bottom of the range. And the signal I'd be looking for was not going to be what you're thinking. I'm going to be looking for a move up to the top of this range or bottom of the range, and then probably a reversal right back into the range until tomorrow at the Thursday night or Friday trading. And that's where we're going to have the new week, the new month, and end of the month, and we're going to have people trying to catch some bones into the end of the week after maybe having a disappointing week in itself. So we'll have to keep that. In the Euro USD, we're in the same thing. You could, if you were in this trade, and this hasn't been actually any as conglumped as the other, because we had that call, which what was it, at 131.06, I believe. We had the opportunity to go long in this pair and move up towards the 131. It looks like you're almost locked in your 50 pips. And if you're in this trade, as I pointed on Hoodie I posted on Hoodie on Twitter, you would definitely want to lock in at break even at these levels and look for continued move higher. But what I would expect to see here right now is probably a little bit of congestion here, and then a shoot back down, and probably sideways trading. Very boring trading. We do have CPI reports out of Europe, but we also have GDP coming in tonight tomorrow in North America, and that could be the catalyst for the pushback down into the range. I'm going to be watching this for solid risk reward trading tomorrow if we're still up at these levels heading into the North America, and I'm going to be looking to go against what we currently have setting up right now. And in the Aussie USD, this trade has been going on for an eternity. If you guys are still along this, I mean, we didn't get a technical closeout. I mean, if you did, hell, because you didn't get your 0.2 pips because of the spread, and you're still holding on to this, then you definitely have more patience than myself. But it looks like we are definitely going to looking to be able to get a signal switch here relatively soon. And if that is the case with this signal switch, you could look for the 102.5 level for a pushback higher, and that would be a nice trade, at least up towards the 103, 103.25. This is a trade I'd be interested in. And I would also watch the New Zealand USD if we have that for a pushback up towards the top of the range. And you can look at the Aussie Yen pairs, but I haven't been watching these too closely yet lately to see what we have here in the Great Britain pound. Well, I'm back above that significant report. Definite false break there. So this is the rundown. We're going to look for a break of the congestion. If we're still up at these levels into North America, this could be a good opportunity to go short this pair right here tomorrow, but we'll have to watch. If you're still obviously in that cow trade, though, ride it out. And the Aussie USD, we could get a signal change here, which would be very nice. And look, this pair did not want to go down. It had a nice rebuttal right here at this point. And let's just look at it on a larger scale just to get an idea better. You can see that it did have nice reversal signals there. And if you wanted to go long this, I would just put my stops below this level here, 101.81. So basically give yourself a 50 pip stop and go long once you get the signal. And it could be a nice run up to all the way back to the top of the range. We'll have to watch out even if you get back into the top of the channel. We got around the 104 level. All right, guys, long-winded, but basically you have to watch a chop end of the month, big moves, and this is where you don't want to lose it. And as I said, you have sometimes, I mean, you have to just watch these ranges. And when the market gets stuck in the ranges like this, let it break out of the ranges. Don't try to guess it. Don't, because you'll just get chopped up. You can get knocked to pieces. And if you want to be aggressive, I mean, the Euro USD has definitely broken out of the range that I was talking about, but it has significant support right here. So you could go long the Euro right here, right now against this, and put your stop down here around 103. That's a big stop. You have to put your stop around below 131. I don't like the risk reward of that. You're shooting for a breakout. But if you're in the trade, good luck. Move it to break even. All right, everybody. Good luck trading. Have a good night, and I'll see you in Europe.